Wish it was solid now. Let me just confirm here real quick. Perfect. Cool. Let's get started then. What we've got going on. Can someone just confirm real quick that they're able to see it on YouTube for me, please?
Yes, YouTube is live.
Perfect, beautiful, thank you. Alright, let's get started then. We have a lot that's going on. We have the earnings, of course, and then we also have some BOJ news that we're going to be taking a look at, and looking at oil, energy, all that type of stuff. So let's start off with some macro fundamentals first. Today's going to be quite easy when it comes to overall economic calendar. So nothing too much to worry about when it comes to the economic data points for right now. But let's start off with the technical side, so then we can set up our alerts as we are trading, and then if their alerts hit while we're doing the fundamental analysis, then we're able to jump into the trade immediately. Alright, so we have our weekly bottom wick rejection already on US 30. We're going to map that out. That is your 51,800 level. Price is pushing back up. I'm still going to map out the weekly top wick rejection here. And then if price continues pushing back up bullish, then we can take a look at some more buy opportunities to extend out those buys. But today it's going to be more about the earnings that will be coming out after the market close, Google and Tesla for the most part, especially when it comes to a lot of these equities, because we're expecting a lot more momentum there. And so let's adjust this to 52,400. Got the daily time frame here. The current daily candle made a nice bottom wick rejection. Previous one bouncing off of that weekly support at 51,800. Headed right into that 52,400 area. So we have about 85 points that we can still catch to the upside. But I'm still going to wait here a little bit just to see what happens with the hourly candle. And if the next hourly just bounces off of that resistance, then we have a much cleaner sell opportunity to come back down. So in the 4-hour time frame here, we have all this consolidation right down here. And then price pushed back up above that area multiple times and then came right back down. So that is the type of movement that I want to see if it will continue happening today. And if so, then we look for those sells to come right back down below the zone, below around 52, almost 250 area, 300 area, and then bring that all the way down into that 123 area. So regardless, you're still going to have about 100 points to the downside if price does reverse right back down. Let's come on to the hourly. We have about 14 minutes left here for this hourly candle closure. We're getting a nice push, quite similar to this. The only way I'm going to look for those continued buys is if price can break above that 52,400. If I get a rejection up top here and then price pulls back down, then we're looking at sells. So let's come on to the 15. Got a nice run up. I want to see if price is holding onto a resistance. If so, I want to see the first 15 after that close back down bearish. And as the next candle breaks the low, then we start looking for our sells. Scale in with about 1% risk, and then you take another 1% risk coming back down into the support area here. So if you don't want to scale or split up your risk between two trades like that, let's say you only want to look for one trade, then you wait for price to break below this zone, and then you start looking for your sells there. So right now I'm just going to set my alert down here But as a new hourly candle opens up, we will start to analyze what happens here, if we actually get that resistance formation or if price pushes up a little bit higher. But ideally, I like to catch the sells from above that consolidation so I can bring it right into the consolidation instead of taking the trade inside of that consolidation area there. Now coming over to NASDAQ, we have the support formation down here still that price is bouncing off of on the weekly time frame. 28,550. Same thing as US 30, it's already created a top wick, but as it continues to break past that, then we'll identify what's the next resistance area to extend out those buys. I'm going to make that 29,250 as well. Then we come over to the daily time frame, and we have pretty much tapped into that daily resistance here already. So what I'm going to do is map out this zone here, this consolidation support area, consolidation right above it. So that support area, if price breaks below that, then we know that we're looking for those sells to come back down. If price breaks above that 29,250, then we're potentially looking for buy opportunities, or even based off of this 4-hour candle, it's going to close in the next 12 minutes almost. So if I get a bullish candle closure here, the next one creates a bottom wick and flips back up, then you're able to look for that scalp to the upside for about almost 200 points, 250 points, depending on your entry. Come down to the 1-hour time frame, no bottom wick on the current 1-hour candle. It continues to push back up bullish. I want to see a strong candle closure here, so at the top of the range here or a little bit higher above the zone. That's going to give me the confirmation that we have buyers in the market. And then the next candle, the next hourly candle, creates a bottom wick and continues pushing back up. The reason why the bottom wick is going to be so important here is because the current 1-hour candle does not have a bottom wick whatsoever. Even if you split that between the two 30-minute candles, neither of them have a bottom wick here, which tells me that after this quick retracement, we didn't even try kicking out the sellers or grabbing the sellers' liquidity to continue pushing back up, which sometimes means that either price will consolidate or you'll see a deeper corrective move to come back down into these previous areas or support areas before continuation back up. So for that reason, I would want to see the next 30-minute candle, 15-minute candle, hourly candle basically creating a bottom wick and then continue to push back up. When you drop down to the 15-minute, you're already seeing that you had a bullish run up here and how the candle's flipping back down. So that's what we want to avoid. I'm going to set an alert right above that top wick, and then I'm going to set another one a little bit further down below the support area, because if price bounces off of this and then continues back up, we have much better buy opportunities to continue pushing back. Or if it breaks below this, then we're essentially looking at lower low formations here and a continuation down. This is for small caps, Russell 2000. So we have just recently added that to our list as well, especially as we're getting the big movements here, which is your 29.35 weekly support that price is bouncing off of. I'm not going to map out the current weekly candles because the range is pretty small anyways, but we see that on the weekly time frame, even this has been consolidating. So I'm going to map out the 3012 as my resistance. Drop down to the daily time frame, and I see that the level that price just tapped into has been rejected multiple times in the past. Right here as resistance, first of all, consolidation support, then resistance, resistance, and once again, resistance here. I'm going to drop down to the 4-hour time frame. And on the 4-hour time frame, I see this entire support formation. If price breaks below this, then I look for my sells. If it breaks above that, I look for my buys. If I see consolidation on the 4-hour time frame, there's no point of dropping down to the 1-hour, 30-minute, or 15-minute, given how small the range is, because there's no trading opportunity here. You're basically going to be forcing a trade. Now we come over to the commodities, and then we'll go back to the currencies here. So with gold bouncing off of a weekly support, continuing to push back up bullish, no top wick on the current weekly candle. That means that we're coming right back up into this next resistance area up top here, which is going to be that 4184.5 area. So we still have a pretty good enough room here to take a trade. Drop down to the daily time frame. The current daily candle, no bottom wick. It continues to push back up bullish as long as the candles maintain above this daily previous resistance. we're solid for buy opportunities. Now, as we drop down to lower time frames, all we need to see is that this zone is being respected as a new support. So as price consolidated into the weekly support areas on the 4-hour time frame, it pushed back up. You got a quick retracement, break and retest, another retracement, rejection right onto that daily previous support and current resistance level that we mapped out. And the current 4-hour candle, no bottom wick, continues to push back up. Come down to the hourly time frame, a lot of consolidation. This is your first breakout candle out of that consolidation. So that's what we have to be careful of, because this also has no bottom wick, whereas the next candle can bring you right back down if it ends up being a fake out. Come down to a 30-minute, no bottom wick on either of the 30-minute candles, drop down to the 15, and same thing, no bottom wick, barely a bottom wick, no bottom wick, no bottom wick here. So we need price to make a bottom wick on the next hourly candle and then continue pushing back up. And I'm going to set an alert right underneath this consolidation. Any questions on any of these pairs so far?
No questions for me.
Perfect. 55.7, that's your weekly support for silver as it's pushing back up. We have completely filled in that gap from a couple of weeks ago. Next resistance area is up top here. 62.88. Drop down to the daily time frame. We just got alert hit on NASDAQ, but we're not taking a trade for another 7 minutes anyways. All right, on the daily time frame, you've got this resistance that price is trying to break past. If it breaks past that, we've got those clean buy opportunities. It's going to be a perfect bounce off of the weekly support, headed right into the weekly resistance here. But if price ends up holding onto a resistance and then pulls back down, then we still have pretty good sell opportunities to come back down into the previous support areas. This 4-hour candle also has no bottom wick, as you guys can see, and it's pushing up pretty much at the top of its own range at the moment. 1-hour candle, also barely a bottom wick, but a nice bounce off of the support. Continuing to push back up. It's in that bullish trend here on the intraday levels, higher highs, higher lows. 30-minute candles, barely bottom wick here, no bottom wick here. And then 15-minute, just a straight shot up. So what I'm going to do is set an alert at 60.4. And then for sells, I'm going to wait for price to pull back down. So I'm just creating it below the zone pretty much anywhere. If price retraces back down, then we'll take a look at that. We have been watching oil. That $80 mark was the first level that price had to break. So I'm still going to map that out. That is a key level if you go back to the weekly time frame, where you have gotten multiple rejections here previously as resistance and then most recently as support as price continues pushing. And then 85 was the next level. If price breaks past 85, that means that we're obviously getting more escalations when it comes to the US and Iran war. And once you break past that, it's pretty much a straight shot coming up into the $90 zone. So we ended up getting a move like that based off of the daily time frame. We got really good push. We got a break and retest above the $80 mark, and then 85 today with no bottom wick. Dropped down to the 4-hour time frame. We came pretty close. We came to almost $88.60, pretty close to that $90 range. So if it breaks past that $90, then we know that we're sitting at peak war once again. But if it keeps on holding onto a resistance and pulls back down, then we're looking for a break below 85, and that's going to pull us right back into the $80 mark. That's only going to happen if we get a little bit of relief when it comes to the military escalations, when it comes to just the war in general, of talking about some sort of negotiation, potentially that 10-day ceasefire proposal. If we get a progress on that, then we can come back below that $85 mark here. But as of right now, we're still playing it up into the $90. Drop down to the 1-hour time frame. So tapped right into 88.60, pulled right back down. I want to see a support formation. If price can continue pushing back up bullish above this 1-hour resistance here, then we can take that right back up into the $90. All right, so here's our alert hit for NASDAQ. We're 4 minutes away from the hourly candle closure. So we're still going to wait it out. Now let's go over to the fundamental side. So let's start off with first Bank of Japan and what's going on here. So Bloomberg here published a report overnight, and Bank of Japan officials, it seems like, are open to raising interest rates at a faster pace than the consensus among the economists here, specifically because of the yen's continued weakness, adding up to the upside inflation risk that they have. So when you're looking at any of the yen pairs, USD JPY, GBP JPY, Euro JPY, all of that, we're seeing how it has tapped into new pretty much all-time highs into that 163.2 levels. And then same thing with GBP JPY, where we had a massive push up above into that 219 area, and Euro JPY also starting to push back up bullish as well. We're still waiting on US 30, so don't worry about that, but it seems like we're breaking past the daily resistance, which means that the next target is going to be coming up into 52,600 area. So let's just wait for the hourly candle, give it the first 5 minutes, 10 minutes, and then we can take a look at what the market is doing. All right, so back to the BOJ. We're saying that the Bank of Japan officials are aware that most of the economists are expecting a hike roughly every 6 months at this point, but they're also open to moving earlier than that if needed. They're seeing that growing evidence that companies are passing higher costs onto consumers faster than before, which is the direct consequence of the Iran oil shock working through Japan's production economy. Also, more important than that, they see the yen's renewed decline as providing an additional incentive for firms to start raising prices. So the officials have described their task as evolving from trying to push inflation higher towards ensuring that it stays anchored around that 2% target, which is materially a different policy posture than we are used to seeing for the rest of the economies in the current situation that's going on. Whereas everyone else is looking at holding on to interest rates and then getting some more rate hikes, there is still a huge rate differential between yen and a lot of the other currencies like the pound, the US dollar, and even for the euro. So the market reaction to this, if we come back to USD JPY, we got a huge corrective move or that massive wick rejection down here. So USD JPY moved from about 163.2 area, came all the way down and dipped below, or 163.2 to come all the way down into 162.6 area here, just based off of the headline. And then we're also seeing that the Japanese government bond yields also rose to their highest level since 1995 here, and the five-year yield rose to almost 2% here. So the reason why this makes this a little bit more important or significant than a usual central bank communication is because we're seeing a lot of the institutional banks and their forex strategists saying things like, this morning's newswires have reported that Bank of Japan is open to raising rates faster than every 6 months. If the JPY does strengthen on the back of a hawkish Bank of Japan signals next week, then that would provide the Minister of Finance an opener for further intervention. And it's not unusual for the Japanese authorities to interfere in the currency market. They have done it multiple times already. So that's a sequence that we're going to end up seeing if, a hawkish Bank of Japan signals reductions, then the fundamental justification for speculative yen shorts is going to give the Ministry of Finance a better entry point to intervene with actual currency purchases, because the fundamental driver of yen weakness, which is that rate differential that I just mentioned, is now being addressed from the Japanese side simultaneously. So next week we have interest rates that are coming out. This week we have interest rates from ECB coming out, and then we have PMI data coming out on Friday, but next week we have interest rates coming out from the Fed, and then we have interest rates coming out from Bank of England, and then Bank of Japan. So pretty much perfect timing where you're sitting in a period where a lot of these central banks are just looking at the data points and deciding their policies. And also we have right now, when we're looking at just tracking the yen weakness in the last couple of months already so far, we have also seen how the hedge fund's net short yen position is near the biggest since 2007. So the carry trade is returning 18% this year, which is the best since 2005, and that has attracted maximum leverage into the yen short. The Bank of Japan's hawkish signal this morning is going to be considered the first credible fundamental threat to that positioning in months. So when we're specifically looking at USD JPY, Euro JPY, GBP JPY, this article here or this morning's news changes that risk-reward calculation, significantly. Intervention risk combined with genuine Bank of Japan policy acceleration risk is the highest threat level basically to these pairs since they have faced that since August 2024. So that is another reason why I'm just staying away from the yen crosses, this week and next week, and kind of just watching what ends up happening there. Because whatever rotation happens with the yen here, you will see the impacts of that when it comes to the equities, when it comes to gold, and when it comes to crypto. So just study, what has pretty much happened back in August 2024 when we saw a huge intervention then with the yen, and how a lot of these asset pairs also pretty much saw a whipsaw effect. Any questions on that?
No questions.
All right, and then we're going to take a look at what is happening with oil here in just a little bit too. Let's just look at this new hourly candle that just started forming. So we created a little bit of a bottom wick here on US 30. We have broken above the daily high. So I'm going to adjust my sell alert right below zone. If price does reverse, we got better sell opportunities here. But what I want to see is a continued push. We got a little bit of a bottom wick. I'm going to give it the first 5-minute, 10-minute candles closure and then a continuation. Coming over to NASDAQ, also got a nice push here. So I'm going to adjust this right below the zone here still. But if I see that this candle flips back up bullish, then we have potential buy opportunities for about 100 points to the upside. Nothing on Russell just yet. Gold got an alert hit too. It is pushing. Current hourly barely made a bottom wick. So I'm going to wait on this one too for the first 15 minutes or so. And then a continuation up. But it does seem like we have enough momentum to continue pushing up into the 40, 41, almost 80 area. 41.72, and then coming back into that consolidation up top there. Now let's take a look at what is happening with the war. All right, so overnight we saw that the U.S. has now widened the scope of its airstrikes on Iran, hitting a military site near the northwestern city of Tabriz, the first time that the area has been struck since hostilities worsened 2 weeks ago. Trump also has posted on his social media that we will bomb and destroy one bridge or power plant, including those around Tehran, anytime Iran's military shoots at a ship in the Strait of Hormuz. So now this is no longer considered more like an escalation threat. It's more of a standing operational doctrine published publicly. Every future Iranian attack on Hormuz shipping now will carry, an explicit named American response at this point. No crude oil tankers have been transiting through Bab el-Mandeb since the Houthis emailed ship owners to tell them not to cross. At least 6 crude oil tankers are destined to load at Yanbu and have turned back or paused in the Arabian Sea at the moment. Just 2 of the 7 berths used to export oil at Yanbu were occupied on Wednesday morning. So we basically have the entire global energy supply that is choked at the moment, which is another reason why we're seeing that massive push up with a lot of the energy prices. And soon we're going to see a full transmission chain effect when it comes to oil, currently sitting at that $86 mark. yeah, 86, almost $87 mark. And then also rising to the Bank of Japan's faster hike signal. Japan imports virtually all of its energy. When oil prices rise in dollar terms, then Japan's import bill will also increase. The yen will weaken further because the Japan needs more dollars to buy energy, and domestic inflation accelerates through import cost pass-through. So Bank of Japan's statement that it sees the yen's decline as providing additional incentive for firms to raise prices is a direct acknowledgement of this entire transmission chain here. Higher oil will force more yen weakness. More yen weakness will force the Bank of Japan to increase their interest rates or hike their interest rates even faster. And faster BOJ hikes will compress the US and Japan rate differential. And that compressed rate differential is the mechanism for the carry trade unwind. So that is the complete chain of looking at US oil, what's happening with US and Iran, to potential USD/JPY volatility of, almost more than 1,000 pips actually, which is not unusual if you do pull up the previous pullbacks that have happened or massive sell-offs that have happened. Some previous levels coming back down to almost a 2,000 pip drop that happened here. You guys understand the full transmission chain of how everything that we have been tracking from equities, commodities, currencies, all of that, the capital is rotating and how they're all impacting each other? Any questions around that?
No questions, actually.
Cool. So we have a few more minutes. US 30 did push up a little bit, but we're starting to see a little bit of a pullback. Nothing on NASDAQ here just yet. Okay, so while we're waiting on that, let's take a look at what is going on here. So we have Google and Tesla earnings that will be coming out today after the market close. So it seems like tech led yesterday's recovery, but chip stocks are cooling pre-market today. S&P 500 short interest nears highest since 2010. Conditions for a short squeeze are rising. So it seems like the bears are covering at the moment. MU, all the semiconductors actually. So the interesting thing here, which we covered in our market updates even last week, and when TSM earnings came out, when they were doing sell the news, there were a lot of retail traders who were jumping in and they were selling a lot of these semiconductors and individual stock names as well. But while that was happening, the institutions were racking up on TSM, MU, and a lot of these other semiconductor names as well. So now we're seeing a lot more aggressive call buying that's happening here, and which aligns with yesterday's rally that we also saw. But this is just the beginning, pretty much. All that buying that happened back here July 17th. Yeah, that happened last week on Friday, and then we start to see that push back up. We do have a continuation. We do think that MU is going to continue pushing. And the targets here, I believe, from a lot of the banks were also coming up even further. So let's check out if you have any recent ones here. These are from 10 months ago, so not those. But we have higher targets. Pretty much every analyst has increased their profit targets for all of these semi names now. MU has 16.8 million total, strongly bullish. This one here has about 35 million. Bloom Energy has 29.5 million. And the capital rotation here, coming back to GLD. We're not talking about XAU USD, we're just talking about GLD here. But we are seeing that gold is also, XAU USD is starting to push back up. That is based on the geopolitical risk premium, the Iran-Hormuz trade tensions, plus the Trump social media threats. Bonds are now weakening. There's no flight to safety in treasuries. The rate anxiety is overriding the safe haven bid here. Dollar is kind of flat here, which you can confirm if you go over to DXY. Pretty much sitting around that 100 to about 101 area here. So not too big of a change that's going on. Small caps lagging a little bit. We're seeing consolidation there too. So today, after the market close, we're going to get Google and Tesla, Texas Instruments, IBM, and NOW coming out. So tomorrow is also going to be an important day because these are all heavy defense and industrial stocks. And so their earnings are coming out. Those are directly impacted by the US and Iran. So if we see a massive push there, then we know that defense is going to be getting a huge inflow, which is impacting US 30 that we trade, because that does include defense stocks too. So the key thing here to watch for Google and Tesla is not going to be the earnings per share or the revenue. It's going to be more about the AI cloud for Google very specifically. And then for Tesla, it's going to be to see more of the investments, to see more of the volume, and if they're actually able to hold up the volume, because these two are more considered the quote unquote the retail side, whereas TSM and all the other stocks that have been providing earnings, or companies that have been providing earnings, were more of the AI hype, but on the manufacturing side. So is there demand, and are they able to keep up with the demand? All right, what else do we have going on here? Cool, that's pretty much it. All right, we're coming up close on our 15-minute candle closure. Let's come back down here. All right, we got a nice top wick rejection on US 30, starting to pull back down. I'm still going to set my alert right here. See what happens with this 15-minute candle closure. If it closes below 52,400, next candle creates a top wick and drops back down, we have our sell. NASDAQ, quite similar, but it hasn't pulled back to a significant level like the 4-hour level here just yet. So this new 4-hour candle on NASDAQ just started forming about 15 minutes ago. So we're still going to give it the 15-minute candle closure, wait for the next one to start forming. Nothing on this one. If there's any other pair that you guys want analyzed, especially with currencies, please let me know. But right now in the group, we're kind of just trading commodities and equities, it seems like. All right, here's our new 15. So while we're waiting on that, very specifically with Google and Tesla, we already talked about this in our market update yesterday in the group, but while we're here, for Google, like I said, the earnings per share, of course it matters, but it doesn't matter, too much, because the market right now is looking more towards what is going to happen with their AI CapEx plans. That's the main focus in large part. Too bullish of a view on spending could trigger the AI overbuild concerns, while a material scaling back could signal that demand is starting to slow down, and it could knock overall tech even lower, especially NASDAQ even lower. So Google's CapEx guidance already raised from 180 to 190 billion. for 2026. That's the specific variable that the markets will react immediately to. Too high, excuse me, and the AI overbuild narrative will return back. Too low, and the demand commitment narrative will start to break down here. So the specific number to watch inside Google's report is going to be Google Cloud's revenue growth rate. The consensus there is expecting approximately 60% year over year. And that's the AI enterprise adoption parameter that we're looking at, combined with Gemini Frozen V2 chip development that was announced earlier this week. Now we're seeing that Google is starting to build a vertically integrated AI stack, like its own silicon, its own model, its own cloud delivery. If cloud is sitting at 60% or more, that would confirm the enterprise AI adoption is real, and the stock is going to start recovering aggressively from the decline that it suffered last week when they announced the Gemini delay news. So the institutional divergence going into tonight is going to be a very important one, with OFI buying up about 560 million, I believe, of Google. And we have a lot of other institutions that are pouring a lot more money in. Another one poured in about 100 million as of last night into Google as well. Pension funds are adding up onto it, but there's also a lot that are selling Google, a lot of profit taking that's also happening with Google. 91 sold about 524 million. PineStone also sold. We have a lot of other bigger names that basically individuals that also sold. So we're looking at specifically the cloud growth rate when it comes to their earnings. Just got an alert hit on silver. Still going to wait it out for this one. A lot of people are focusing on Google also because they're considering that, it's reporting on the health of the entire AI investment cycle. And then for Tesla, the more important thing is going to be more spending on cybercab and robotics, and that is going to be providing the bullish signal here. So the bar actually for Tesla is pretty low in general, because it's more of the inverted dynamic related to Google. They've already had record deliveries of 480,000, or just a little bit above that, units that are already published. So here the variable is going to be more of their automotive gross margin. So promotions driving volume, but compressing profitability here. So margins above 17% are going to validate the AI and the robotics repositioning story, and anything below 15% is going to make the valuation very difficult here. So those are some of the very key things that we're going to be watching out for. And tomorrow we have defense that's coming out. All right, we got a flip on this 15. Got the first 5-minute candle closure below the zone. We got a new one that's forming here. Let it create a top wick, breaks the low. We've got our entry. NASDAQ is starting to flip back up. So the hourly has made a massive bottom wick here. You wait for this candle to flip in your direction, continuation back up, and you've got clean buy opportunities. I'm going to set the alert here still. So now there's a couple of things that you can do. You're about 9 minutes out from a 30-minute candle closure. or just below 9 minutes, you can let this 30-minute candle closure, since we're pretty much sitting right at that daily resistance level here that price tried to break through. So you let this candle close, this 30-minute candle. You'll let the next one create a top wick, continue pushing down. That gives you even better confirmations for those sells, as a little bit of a higher time frame than the 15-minute or 5 minute, 5 minutes just to check the volume. It's giving you the confirmation that, it's creating a top wick and it's flipping back down. One thing that we need to be careful of here, the reason why I have my alert set down here, it's also because I'm looking at this overall zone. If price just taps into this and then reverses, like pretty similar to what NASDAQ is doing here, then that just means that price is just trying to respect the broken resistance as a new support for a continuation back up. For NASDAQ as well, I'm looking at this overall zone here. If it can break the previous hourly highs and continue pushing back up. This is also a new 4-hour candle here that started forming less than 30 minutes ago. So creating a bottom wick and flipping back up is really what we need, so we can break these previous highs here to the left and continue pushing back up closer to the 29,250. Or you split your risk. So you take a 1% risk entry here, and then you take another 1% risk entry as price breaks below down here. I want to see it break its own low, and I'll get in for a 1% risk to come all the way down here and then scale in additional. So 1% risk here. I got in at 41. Ultimately, I would want to increase my TP all the way down here. This is just 1% risk here. And then that is just based off of the volume. I'm keeping my stop loss a little bit higher, above the current 15. If you want, you bring it up a little bit more. You go for a total 1-to-1 right around this area. And then you let the next 30 bring you down even further. But ultimately, this would be the TP if price can continue reversing back down bearish. Let's just check one NASDAQ here real quick. And then not much here. Gold is also starting to pull back down. So the 15-minute has no top wick here, but it's pushing at its lowest. We're about just 4 minutes out from this 30-minute candle closure. So we're going for about 90 points here at the moment for our first TP, but since this candle is going to close here in the next 3 minutes, the 30-minute, I do want to give it enough room for the next candle create a top wick, but if it breaks above that daily high, then obviously, that would invalidate that trade. So I'm keeping it tight. I'm not placing it at the top wick or anything like that. I'm keeping it tight. So then at the first indication of price reversing, you're pretty much out. You're reducing your risk exposure entirely. Just on 2 minutes left for this 15 and 30-minute candle closure. Let's come back here. Actually, I'm going to ask the Redditor this question instead of Simon. So this is short-term, mimics pretty much like retail trader behavior here. Got earnings, market fundamentals, market sentiment, options flow, institutional, spelled that wrong. Institutional and retail activity. Alright, got about 5 seconds left for this 30-minute candle closure here. We want to give the next candle enough room to create that top wick, continue pushing. Let's check up on NASDAQ here. So the previous 30-minute candle left a little bit of a bottom wick here. So this one, right off the bat, pushing up a little bit bullish. Previous 15, created a nice top wick, came back, closed bearish. I'm going to pull this one to the side here so it continues loading while we're looking at this. Alright, what do we have on gold? Also no bottom wick on the current candle, but we don't have any confirmations of bullish volume here just yet either. So what I'm going to do for gold is set the alert right at the previous high. We have our trend spider here. Let's take a look. Yeah, TSM, it had amazing earnings. AI semis confirmed super cycle. Taiwan exports orders up 59%. So there's a lot of seller news that was going on, and then we had funds that ended up pooling in to buy a lot more. Alright, so smart money, options, big semis bet. What else? Anything that really stands out? We've already looked at all this stuff here. $220 million into Intel. Big accumulation in US mega tech. Nothing too different from the previous one that we already saw. Alright, with US 30, we got a nice topic rejection on the current 30-minute candle. This is still a very important zone, so even if we do break below it, we're coming right back into the consolidation support area. We're just waiting for the volume to continue pushing down. So regardless, I am still going to take some profits right around here and then extend out the TP. For me to scale in, I would want to see actual candle closures down here. If I start to see a little bit of consolidation or price not giving me enough volume, then you're pretty much out. But it seems like we have some volume here, so we should be good. Nothing with NASDAQ here. No worries, have a good one. Alright, a little bit more. We're pretty much close to the zone here. So once I take my partials, I just need a little bit more of a push just right into the zone, even if it's not all the way to the bottom of the zone. But once I take my partials, I'm going to reduce my stop loss to sit somewhere up top here. I'm not going to move it to break even unless price can break below the zone. But I will take about 50% off right here. I'm about to get another 5-minute candle closure here soon. We're going to stay on for this 15-minute candle closure. So for another 5 minutes. We have our alert set for NASDAQ, so we should be good. Just bring that one down a little bit more. Nothing in between. So regardless of however much price moves, we're not jumping into that. Russell's getting close, but still we want to see some candle closures here before entering. Gold seems like it's trying to hold on to a support, but it could very easily just turn into consolidation. So we have to wait for 41.60 to be broken first before jumping in. And then coming over silver, seems like same thing. It's trying to hold on to a support, but it has to break above at least 60.7 and then a continuation. Oil just seems to be kind of hanging around here at the moment. So same thing, we have our alert set there. We should be all good. This is the main zone that price has to break below, and then you have a really good move for almost 200 points to the downside. Total move here. Yeah, 250 if this is the entry that you took and you're scaling in. But make sure to take partials as price is sitting closer to the zone here. That is a previous daily support. It was the current daily resistance until price broke above. And then that is also the area where price continues to just consolidate even on the 4-hour time frame and the previous major support. Alright, we're pretty close to the zone. We almost have a 15. Close here. I'm going to take a little bit off. So not the full 50, but I'm going to take about, let's do 30% off. So I took 30% off right now, as the 5-minute is showing me that there's not a lot of volume. Obviously, there's still a lot of bearish pressure here, but we're about to get a 15 close, and we're going to call it a session. I'm going to set an alert right underneath the zone here, and I'm going to reduce my stop just a little bit right underneath 52,400. I'm going to bring it to 52,385. So the reason why I'm still keeping it is because if price still wants to fluctuate a little bit, and then let's say if the new hourly candle wants to create a top wick and then continue pushing down. But if price is going to continue pushing down and it's just looking for liquidity, it really should not be coming to anything higher than just the previous resistance levels here. So that's why my stop loss is just above it, because if it does create a top wick or spike up a little bit more, then I pretty much want to be out, and then you have a much better sell opportunity down here to catch about 100 to about 150, depending on your entry points to the downside. You also still have NASDAQ that's trying to set up here. So this is probably going to take about another hour to an hour and a half, where it's going to create a support, continuation back up, or if it wants to drop below this, then you need a little bit more time. Russell is pretty much at the bottom of its own zone here, that 4-hour consolidation and the 1-hour consolidation area. So give that another half an hour or so to create a top wick, continue pushing down if it wants to look for sells, or else you see a lot of consolidation and then price coming back into this consolidation area here. With gold, quite similar. It already created a top wick, it's pushing back down. 30-minute, 15-minute. There's not too much going on here. Any questions on anything that we went over today? The fundamentals, everyone fully understands how to prep for the earnings after market close?
Yes, no questions.
Perfect. And you also have that full detail analysis from the market update yesterday as well. That's posted on School already. All right, cool. So today we have the market update call. You guys have the link for that on your School calendar. And then we also have our US 30 simulation session today too. So I'll see you guys for that.